And how do you think about sectors within venture? So let's say life sciences versus tech, or whatever way you slice it.
Yep.
Do you go into it with a set allocation decision? You're going to do, 60-40, whatever it is, or do you really just look at funds individually on a return level versus trying to fill a sector allocation?
I think we think of it more of a negative screen in terms of, for instance, if we have a view that life sciences is more risky, we'll watch that very carefully and make sure that's not becoming, say, 40% of the portfolio. But if that's 10% or 20%, there's less of a very specific view, with the proper caveat of sometimes we will lean in and out of certain areas.
Right.
So I think it's more kind of episodic of what's coming up. And in terms of private equity, you don't have the necessary luxury of saying, I want to fill this one bucket in this year. You're kind of at the whim of who's raising at that time. But we do try to manage it to make sure it's somewhat balanced. I think the other evolution that we've seen a little more recently is just the advent of technology. And it used to be very specific, well, this is a tech deal and this is not a tech deal. But technology is emerging or kind of bleeding into all different sector areas. So if we're looking at a healthcare company or a fund, that looked very much like a technology company a few years ago. So trying to understand what the underlying risk is to the business flows into the portfolio construction.